Hello everyone, this is Surajbaviskar. Welcome to Surajbaviskar Trading, my YouTube channel. I am delighted to see your response and thank you guys for your support. Do send me a comments on earlier videos so that I can share valuable information or topic with you. If you have not seen my earlier videos yet, kindly have a look at it. Today, I am eager and excited to share a topic which is very basic and good to start for any newcomer. What is stock market and how stock market works? Stock market is also known as equity market or share market. It is a centralized financial marketplace where participants buy and sell shares for publicly listed companies. These shares represent ownership in a company and entitle the shareholder to a portion of the company's assets and profits. Companies that want to raise a capital can go public by issuing shares to the public. This process is known as initial public offering, that is IPO. Once a company's shares are listed on the stock exchange, they can be bought and sold by investors. The price of the stock is determined by supply and demand dynamics in the market. Factors such as company's financial performance, economic conditions, and overall market sentiment can influence stock prices. Stock market indices such as Nifty 50, Bank Nifty, Sensex are used to measure and track the performance of a group of stocks. They provide a snapshot of overall market or specific sectors. Investors typically buy and sell stocks through a brokerage firm or online trading platforms. Brokers act as intermediary, facilitate transactions between buyers and sellers. Stock markets are subject to a regulatory oversight to ensure fair and transparent trading practices. Regulatory bodies such as Securities and Exchange Board of India, that is SEBI, enforce rules and the regulations to protect investor and maintain market integrity. Stock market plays a crucial role in capital formation, providing companies with access to fund for growth and expansion while offering investor opportunity to participate in the financial success of these companies. It also serves as barometer of economic health and investor confidence. Why to invest in stock market? There are many reasons to invest in a stock market, like potential for capital appreciation. Stocks have the potential to increase in value over time, allowing investor to profit from the price appreciation. Second, dividend income. Many stocks pay dividend, providing a regular income stream to investors. This can be attractive for those seeking income in addition to capital gains. Third, diversification. Investing in a variety of stocks can help spread risk and reduce the impact of poor performance in any single investment. Fourth, ownership stake in companies. Buying a stock means owning a portion of a company, giving investor voting right and share in the company's profit. Fifth, liquidity. Stocks are generally highly liquid, meaning they can be easily bought or sold on the stock exchange, providing flexibility for investor. Hedge against inflation. Historically, stocks have provided returns that outpace inflation, helping investors preserve their purchasing power. Professional management. For those who prefer not to manage their own investments, various investment funds and professionals can help manage portfolios. Historical performance. Over the long term, stock market has demonstrated the potential for strong returns, outperforming many other investment options. Ninth, accessibility. With online trading platforms, investing in stocks has become more accessible to a broader range of investors. Last, 10th, innovation and growth. Investing in stocks allows individuals to support and participate in the growth of the innovative companies and industries. Different types of stocks: common stocks and preferred stocks. Common stocks represent ownership in a company and voting rights at stakeholders meeting. Holders may receive dividends if declared by company, and common stockholders are last in the line to receive assets if company goes bankrupt. Whereas preferred stock offers priority over common stockholders in terms of dividends and asset in the event of company's bankruptcy. Typically, Preferred stockholder do not have voting rights. Growth stocks issued by a company with a high potential for capital appreciation. These companies often reinvest earnings instead of paying out dividends, so they are called growth stocks. Value stocks issued by companies considering undervalued based on fundamental analysis. Investors expect that stock value to increase over time. Dividend stocks. Dividend stocks pays regular dividends to stakeholders, providing a steady income stream, common among matured and stable companies with consistent profits. Blue chip stocks represents shares in large, well-established and financial stable companies with a history of reliable performance, typically considering as a low-risk investment. So most of the investors are putting their money in blue chip stocks. Small cap stocks refer to a stocks of a smaller companies with a market capitalization between $300 million and $2 billion. These stocks often have higher growth potential, but they are riskier. Examples of small cap stocks in NSE is Thyrocare Technologies, Delta Corp, VST Industries, Bajaj Consumer Care, etc. Mid-cap stocks belong to companies with a market capitalization between $2 billion and $10 billion. Mid-cap stocks consider a middle ground between small cap and large cap stocks. Examples of mid-cap companies listed in NSE exchange are Castrol India, LIC Housing Finance, Metropolis Healthcare, etc. Large cap stocks. Large cap stocks represent shares in large, well-established companies with a market capitalization exceeding $10 billion, generally considered a more stable but may have slower growth. For example, all stocks listed on a Nifty 50 like Reliance, Infosys, TCS, ONGC, Maruti Suzuki, Hero Motors, those are example of large cap stocks. Penny stocks. Stocks with a low price, usually trading below $5, that is 40 rupees. Considered highly speculative and often associated with smaller companies or those in a financial distress. Those are called penny stocks. Cyclical stocks. Cyclical stocks tend to follow economical cycles, performing well during economic expansion and poorly performing during economic contradictions. Examples include companies in the automotive or construction sectors. They are known as cyclical stocks. Defensive stocks maintain stable performance regardless of economic conditions, often found in industries such as utility, healthcare, and consumer goods. These are called as defensive stocks. Tech stocks belong to a companies in technology sector known for innovative and rapid growth. Examples include companies in software development, hardware, and internet services are called as tech stocks. Biotech stocks represent shares in companies involved in biotechnology and pharmaceutical sectors, often characterized by high volatility due to uncertain nature of a drug development. Key elements, term, or words related to stock market. Stock market, a financial marketplace where buyers and sellers trade stocks, equity, or share of a publicly listed companies. Stock. Stock is also called as equity or share. A share in ownership of a company representing a claim on the part of company's assets and earnings. Exchange. A platform where stocks are bought and sold. Examples include NSE, that is National Stock Exchange, and BSE, Bombay Stock Exchange. Ticker symbol. A unique series of letters assigned to a security for a trading purpose by exchange. For example, Infosys is having ticker symbol as INFY, INFI. Bull market. A period of rising stock prices typically accompanied by optimism and investor confidence. Bear market. A period of falling stock prices, often marked by pessimism and a decline in investor confidence. IPO, initial public offerings. The first sale of a company's stock to a public, making it publicly listed or traded company. Dividend, a distribution of a portion of a company's earning to its stakeholder. Market capitalization, a total market value of a company's outstanding shares, calculated by multiplying share price by its number of shares. Broker, a person or a firm that facilitates the buying and selling of stocks on the stock market. Nowadays, we have a lot of online brokers. Index, a benchmark that represents a specific segment of a stock market, used to measure a market performance. For example, Nifty 50, Bank Nifty, these are index in a NSE, whereas sensex is an index on Bombay Stock Exchange. ETF, exchange traded fund, a type of investment fund that exchange traded product representing a basket of assets such as stocks or bonds. For example, SDFC ETF, ICICI Prudential Nifty ETF. Type of market participants. So now we'll see who all are participate in stock market. Number 1, individual investors. Individuals who invest their personal funds in stocks. They may include retail investors, small traders, and high net worth individuals, that is HNI. Institutional investor, large organizations that invest on behalf of others. This category include pension fund, mutual fund, hedge funds, and insurance companies. There are two broad categories of institutional investor, DII and FII. DII means domestic institutional investor. So companies which are present in India, they are called DII. FII, foreign institutional investor. The companies who are working in other countries and are legally trading in India are called FII. Retail investors, individual investor who trade in relatively small quantities, often for personal investment purposes. Market makers, entities that facilitate buying and selling of financial instruments by providing liquidity. They do so by quoting both buy and sell prices and holding an inventory of shares. Brokerage firm, intermediaries that facilitate buying and selling of financial assets like shares, stock, or equity. They may provide trading platform and research tool for investors. Investment banks, institutions that provide various financial services including underwriting, mergers and acquisitions, and advisory services. They may also engage in proprietary trading. Hedge funds, investment funds that employ various strategies to generate returns for their investors. They often use leverage and may engage in short selling. Mutual funds, pooled funds managed by professional fund managers. They invest in the diversified portfolio of stocks, bonds, and other securities. There are various types of mutual funds like equity-based mutual fund, debt mutual fund, and balance equity funds. Pension funds, funds set up by employers to provide retirement benefits for their employees. They invest in diversified portfolio to generate returns over the long term. High frequency traders, traders who use sophisticated algorithm and high speed data connection to execute a large number of orders at extremely high speed. It is called highly frequency trader or HFTs. Market regulators, regulatory bodies that oversees and enforce rules and regulations to ensure fair and orderly functioning of the market. Examples include Securities and Exchange Commission SEC in the United States and Securities and Exchange Board of India, that is SEBI. Type of exchanges. As we know, exchange is a platform where stocks are bought and sold. So now we'll see what are exchanges available across the globe. National Stock Exchange NSE, major stock exchange in India, where index name Nifty 50 and Bank Nifty are the major index listed on NSE. Bombay Stock Exchange BSE, oldest stock exchange in India. Sensex 30 is the index name which represents the Bombay Stock Exchange. New York Stock Exchange NYSE, largest stock exchange in the world based in New York, United States. NYSE Composite Index and NYSE US 100 is the index name which is listed on New York Stock Exchange. Nasdaq, electronic stock exchange based in New York, United States, known for technology stocks. Nasdaq Composite Index is listed or represent Nasdaq. London Stock Exchange LSE, one of the oldest and largest stock exchange globally. FTSE 100 is the index listed on London Stock Exchange. Tokyo Stock Exchange TSE, leading stock exchange in Japan. So main index in Tokyo Stock Exchange is Nikkei 225. Hong Kong Stock Exchange HKEX, a key stock exchange in Hong Kong. Hang Seng HIS is the index name listed on Hong Kong Stock Exchange. Shanghai Stock Exchange SSE, main stock exchange in mainland China. SSE Composite Index is the index listed on Shanghai Stock Exchange. Toronto Stock Exchange TSX, principal stock exchange in Canada. S&P or TSX Composite Index is the index representing Toronto Stock Exchange. Australian Securities Exchange ASX, main stock exchange in Australia. S&P or ASX 200 is representing Australian Security Exchange. Type of securities. So what different kind of securities can be traded in different exchanges? Stocks or equities or shares. Stock represent ownership in a company. Shareholders have voting rights and may receive dividends if company declares. Common and preferred stocks are common types. Bonds, that is fixed income securities. Bonds are debt instruments where investor lend money to an issuer, that is government or corporation, in exchange of periodic interest payment and return of principal at maturity. Mutual funds, pooled funds from the various investors used to invest in diversified portfolio of stocks, bonds or other securities. Mutual funds are managed by professional fund managers. Exchange traded funds, that is ETFs. ETFs are similar to mutual funds but traded on a stock exchange like individual stocks. They often track an index or specific sectors. Options, contracts that give the holder the right but not the obligation to buy or sell an underlying asset or stock at a specified price before or at the expiration date. Futures, contracts obligating the buyers to purchase or seller to sell an asset or stock at a predetermined future date and price. Futures are common in commodities, currencies, and financial instruments. Options and futures are part of derivative market. Real estate investment trust, companies that own, operates, or finance income generating real estate. Shareholders receive dividends from the rental income or capital gain. Preferred stocks. Preferred stocks are hybrid securities which characterize both stocks and bonds. Preferred stockholders receive fixed dividend before common stockholders, but preferred stockholders do not have voting rights. Treasury securities. Treasury securities issued by a US Department of Treasury, including Treasury bills, that is T bills, Treasury notes, that is T notes, and Treasury bonds, that is T bonds. Treasury securities are considered as low risk investments. Municipal bonds. Municipal bonds are issued by local governments or their agencies to fund public projects. Interest income may be tax exempt at the federal or state level. Corporate bonds. Corporate bonds are debt issued by a corporations to raise capital. Interest payment and return of principal are made to the bondholders. Corporate bonds are risk and returns are varies in corporate bonds. Common stocks. Common stocks represent ownership in a company and provide voting rights at a shareholding meetings. Commonly traded on stock exchanges. I believe in sharing knowledge, and that's why I'm here on Surajbaviskar Trading. I want to empower you with knowledge, strategies, and lessons learned. Together, we can navigate the exciting world of stocks and financial success. If you are ready to unlock the doors to financial freedom, join me on this exciting journey. Hit that subscribe button, like this video if you found it valuable. Don't forget to leave comment below sharing your trading goals or any specific topics you would like me to cover in future videos.